All right, let's just jump right into it. So, Bitcoin hits a new all time high, right? This was the moment every crypto investor was waiting for. The rocket fuel was in, the countdown was done, but then absolutely nothing. The explosive altcoin season that historically follows Bitcoin's peak just vanished. It's the biggest mystery in the market right now. And in this explainer, we're going to piece together the clues to figure out why. But before we start playing detective, just a quick but really important note. This is all for educational purposes. It is definitely not financial advice. Okay, with that out of the way, let's start the investigation. I mean, this is the question on everyone's mind, isn't it? You've probably been asking it yourself, looking at your portfolio and wondering what happened to the script we've all seen play out in every single previous cycle. It's a totally valid question, and let me tell you, the answer is way more complex and fascinating than you might think. Stick with me, because by the end of this, you're going to see exactly how technical charts, big institutional money, and the global economy are all tangled together. We're going to connect the dots and get to the bottom of what's really going on. So, our investigation begins right at the scene of the crime, the crypto market itself. First, what is an altcoin season, and why is its absence so darn strange? To put it simply, altcoin season is that crazy, euphoric time when profits from Bitcoin start flooding into all the smaller alternative coins, causing their prices to just go parabolic. It's a classic sign of a crypto bull run. Or at least, it always used to be. To find our first clue, we need to ask a really basic question. Are we even in the right kind of market for an altcoin rally? Let's take a look at what the charts are telling us. You know, some technical analysts are asking this exact question. They're basically suggesting that while everyone was waiting for the altcoin party to get started, it might have already been over before it even began. So one of the simplest but most powerful tools traders use is something called the 50-week moving average. Just think of it like a smoothed out average price over the last year. It helps you see the market's long-term trend, cutting through all the daily noise. And historically, the rule is simple. If Bitcoin's price is above this line, we're in a bull market. If it's below it, well, that suggests we're in a bear market. And here is our first major clue. For several weeks now, Bitcoin has been trading below this key indicator. And if history is any guide, that's a classic bear market signal. So while everyone was looking for altcoin season, the charts were quietly whispering that the bull run might already be over. But you know, technical charts are only one part of the story. To really get what's happening, we have to look at who is driving the bus this time around. Because this cycle, it's unlike anything we've ever seen before. You see, previous cycles were a total retail frenzy. They were fueled by everyday people like you and me, dreaming of those life-changing gains. This cycle, it's completely different. This is the era of the institutions. The market is now being driven by ETFs and huge professional capital. And this gets to the absolute core of the problem for altcoins. Institutional money is disciplined. It's cautious. They're buying Bitcoin, maybe some Ethereum. They are not buying meme coins or super speculative projects. The rocket fuel for that kind of rally just isn't coming from them. Which brings us to the big turning point in our investigation. If the institutions won't light the altcoin fire, who will? Well, historically, it's always been the retail investor. So, where are they? And the answer to this question, it's not on a crypto chart. Nope, it's out there in the real world, inside the wallets and bank accounts of everyday people. Okay, so let's rewind to June 2022. To fight off that crippling 9.1% inflation, the Federal Reserve kicked off one of the most aggressive economic tightening campaigns in modern history. They systematically started yanking money out of the economy. I mean, just look at this. Interest rates went from almost zero all the way up to 5.5%, and they did it in a shockingly short amount of time. This made borrowing money for pretty much everything, cars, houses, business loans, incredibly expensive. And at the very same time, the Fed cut its balance sheet, which effectively just vaporized $2.5 trillion of liquidity from the entire financial system. That is a massive amount of cash that's just gone. It's no longer available to be invested in risky assets like altcoins. And this wasn't just some abstract thing happening on Wall Street. It had a direct, real-world impact on people. You can see it right here. The number of people falling behind on car payments, on their credit cards, on their mortgages, it's been climbing steadily. The financial squeeze on the average person is very, very real. And that right there brings us to the heart of the matter. The high risk, let's see what happens, money that fuels an altcoin season. It comes from disposable income. But right now, people are way more worried about paying their rent and putting food on the table than they are about gambling on the next big crypto moonshot. So we've gathered all of the clues. The charts look kind of bearish, the new institutional money isn't playing the altcoin game, and the retail investor is financially squeezed. So what on earth does this mean for the future? What we are witnessing is something you could call a great decoupling. Bitcoin's fate is now tied to institutional money and these massive financial flows. But the fate of altcoins? It still totally depends on the financial health and the risk appetite of the average retail investor. They've really become two separate markets, powered by two completely different engines. So what would it actually take for an altcoin season to come back? Well, it's not just about Bitcoin's price anymore. It's about the bigger economy. We'd need to see conditions improve for everyday people, which would lead to more disposable income, and then, finally, maybe a renewed appetite for taking those big risks. And that leaves us with the final and most critical question. This decoupling, it has broken a foundational rule of the crypto market that we all thought we knew. So is this just a temporary thing, a side effect of a tough economy that'll bounce back? Or has the arrival of all this big institutional money changed the very structure of the game forever? That, right there, is the question that will define the next era of crypto.
Please subscribe and like.